For the last 2 weeks, we've been discussing a potential minor correction and how to spot this correction while prices rally. Throughout this bull market, it's been going on for nearly 3 years. Every time Bitcoin has rallied, we've seen an influx of interest, not only from dumb money, from retail money, but also from institutions and smart money. Every single time we've rallied, we've seen this interest come back. And on each of these occasions, we've seen Bitcoin rally only marginally more before putting in a substantial correction. It's happened over the last 2.5 years, with each time the market going down somewhere between 10 and 30%. And with Bitcoin now falling 9% into the retail price zone, it doesn't seem like this time's any different. And with the data from our monthly forward returns, it seems highly unlikely that Bitcoin is going to print straight green months. The probability is extremely low for the months of August and September to both be in the green. We go back 15 years, and this has only happened twice in the last 15 years. That's just 13% of the time that we would see a green August and a green September. So that would beg the question, when is going to be the red month? Over the last 3 years, since the market bottomed around June and November of 2022, there's been multiple occasions that have come through to scare the market back into thinking that the bull market is over. March 2023 was the banking crisis. Then we saw the scare after the ETF was launched. Then there was the new all-time high and the halving event in 2024 that led into the Japanese yen carry trade scare. On each of these occasions, the market has rallied into new fresh highs, or in a few of these occasions, as the cycle continues on, we've rallied into new all-time highs. Now, as you can see, it is getting quite late, and a few of these corrections may be the final corrections that we see before the next blow off top. But for now, we're still seeing the market reset, and resetting is exactly what we want to see. This is a good thing at this stage in the market. We've got the market sentiment for crypto and Bitcoin resetting into neutral for the last few days, now popping back up into greed. We've seen it reset for the S&P 500, correcting from these highs. And we've also seen the market sentiment resetting on the NASDAQ, with the AI narrative just cooling off over the last few days. But this really hasn't come as a surprise to our members. We've been tracking this for many, many months throughout 2025, as we're expecting a pullback into the months of August and September. Now, the end of the year seems to be running relatively well, but when are we going to get the end of this pullback? That's essentially the question that we're wondering, because of where Bitcoin currently sits in the cycle. Is this just part of a shakeout before the next run higher? That's what we're looking at in today's video. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. As we've discussed, the resetting is a good thing. We think it's part of this stage of the cycle. And when I'm talking about the cycle, we're looking at the shorter term outlook here, basically over Q3 and Q4. There obviously has been a slowdown after this significant rally from the first tariff scare. That was around 34% in the S&P 500. Now, there are several reasons why the markets could be resetting at this time, but of course, we focus primarily on cycles and of course the price charts to lead the way. The news comes after the fact. Like we saw the markets climbing, the cycles suggested that we were going to get a pause, a slowdown, a consolidation, a correction. We don't know the exact extent of that. We don't expect it to be as much as the tariff scare that happened in April, but I think there's still going to be some sort of pullback. Then the news typically follows from that point. Of course, we've heard about tariffs. We've now heard about all of the data that's come through from the Fed last week with unemployment and non-payroll, and this has then led to the interest rate probabilities finally dropping in the next meeting to basically cut the interest rates from 4.5% to 4.25%. If this is now known by the market or more of the market pricing it in, maybe this correction could be part of this correction that we're expecting in this stage of the cycle, basically looking at Q3, Q4 at this period. So if that is then priced in, once we get to this meeting, which is expected in September, mid-September, this could then start that correction from the low into the next rally. And generally, what we've seen throughout Bitcoin's entire history is that we need to see the S&P 500 running into fresh highs or having a clear run at new all-time highs. You can see the previous cycles here. You've got the Genesis cycle. It ran out of the bear market GFC low, and Bitcoin, well, it followed suit. But as we've continued on, obviously the market caps have increased. I think these give us a little bit more of a better reading on the market. So 2013, the S&P in green here ran into fresh highs firstly, and then into new all-time highs above that top. Bitcoin basically did the same thing, of course with some volatility in between, as it was still a small market cap, comparatively speaking. 2016 into 2017, nice strong run out again for the S&P 500 in green. That was after the election. 2017, Bitcoin did the same thing. And then we run into 2020, 2021. Nice big move out. S&P 500 followed suit. Then began to slow down around those highs, just like what the NASDAQ also did at those highs back in late 2021. Bitcoin put in a slightly higher high, and then the bear market followed. So that brings us to the present day. We have new fresh highs here for the S&P. We've had new fresh highs for BTC, but as you can see with these log lines that I have in the background, these levels have shown up time and time again to be resistance here for the S&P 500. This is now the 5th time since applying the resistance level. This is the peak of the stock market's previous cycle, 2007, and the low, the GFC low in 2009. Now that's projected off the bear market that we saw for the S&P 500 in 2022. That's where the top point is absolutely anchored to, and to that low as well. And as we run into these new fresh highs, it's basically hit its head on this line multiple times. You can see one here, ran down, pulled up again, 2, 3, 4, and here we are at our 5th time hitting the head and pulling back. Now, the theory that I've presented on the channel for many, many months is if the S&P is able to break out of this zone, break past the logarithmic resistance that spans back from the peak of 2007 and 2009 being that low, I think we could go on a pretty significant run to the upside. And I could even say it's severe for the bears or anyone sitting on the sideline with too much cash. You can have some cash on the sideline, and that goes for everyone, institutions, retail, no matter who it is. It's just going to depend on that individual person. And if they have too much still sitting on the sidelines, I think that's where the FOMO would really kick in if we're able to break out of this high that's just been put in at around 6,400 points on the S&P 500. If that occurs, Bitcoin's price over the top of the S&P 500, which would probably follow suit into that period. But the question I presented at the beginning of the video is, when are we going to see this red month? And I think the two options were between August and September. We haven't seen 2 green months in a row since 2013, which ran into that all-time high. Of course, there's a 13% chance that this does happen. 2 out of 15 times in its entire history, we've seen a green August and a green September, even if it was extremely marginal like in 2013. So if you wanted a big green month, well, you only have one option here, which is 2012. So 1 out of 15 times we've seen that. But Bitcoin can do red August and red September. So that it has a much higher hit rate. You can see already in its entire history, 1, 2, 3, 4, 5 times out of 15. So a third of the time, just for these 2 months, it can be red. So if it is going to be red, when do we want to see it? Ideally, we see it in August. If it is August, it shouldn't come as a surprise according to the data right here. S&P 500 performance in August in the second term of post-election years. We've got the second term for Trump. It's the post-election year. going back 74 years, currently in the 75th year. Each of those occasions, 100% of the time, August has been red for the S&P 500. And if it's going to be red for the S&P 500 at this stage of the cycle, and with Bitcoin already hitting 123,000, maybe we also see a red, if not just a barely marginal level price here for Bitcoin closing out the month of August. So if that leads to a red August, I may have said September, if it is a red August, then there is a slightly better chance that we see a green. However, for Bitcoin, it doesn't mean that we're guaranteed a green in September. We've seen multiple red after red. We have seen a few occasions now with red August, green September. Red August, green September. Here is another one, the 3rd, the 4th, and the 5th. Again, even if they are only marginal green Septembers, 7%, 4%, 6%, 3%, and 3%. So they are single digits, still very, very small. But again, you have 5 occasions where you had a red August and a green September. So we have, out of the 15, a third of the time, it is going to be red and red. The other third of the time, it was red August, green September. 2 of the times was green and green. And on 3 of those occasions, to round out the 15 results, we've seen a green August with a red September. So just looking at the data, and of course, that's all we can do at this point, it would lean more so to a red August and potentially green further forward because of where we sit in the overall cycle. Now, if it was marginal or it got into the green, this was after a green September. Green September continues on with the green. Green September continues on with the green. Green September continues on with the green. Green September also continues on with the green. And of course, 2013, the top was in November, basically the 30th of November. And then December came down. That's why you have such a huge green month. Green September, also a couple more greens with one minor red here. But again, these 2 were August and September in the green, which showed a red in those final few months. And the last one here in 2010, which I don't put too much weighting on, you still had a green, and green followed out the year. So that would be the preference, a red August, green September, higher chance for it to run into the end of the year, which would then also line up with Q4 being that strong finish to the year that we have been covering with the cycles. So these are the 5-year and the 20-year cycle here. Here is the 5-year, showing that we're basically on track with the corrections, even if it is slightly later for the larger correction. We've had the minor corrections along the way. And the same deal for the 20-year cycle here. The pullback, a bounce, a rally into a lower high that then leads into a further pullback. Now, the US dollar has also seen strength lately. We did get a short squeeze to the upside. There was a lot of short interest in the market, meaning traders were betting on the market going down. You could see that this was just starting to wear thin. That a ton of pressure for the south side, for the downside, has basically now been met with buying to come back in, to step in to cover their losses. And with this red bar down, we're basically now in the same trading zone that we've been in for many, many weeks. You have to go back to basically April. So we're still stuck in this trading zone for the US dollar. As we continue on with the cycle, the 18-year cycle, our view is that we'll see further downside, but along the way, we do need to get some tests and rallies back up to those previous support levels, which then flip it to resistance. So if this is rallying, well, we're starting to see that little bit of pressure come through for Bitcoin and cryptos. Just with that last day there on Friday, we did see a big significant correction for the US dollar. And over the last couple of days, we've obviously seen Bitcoin rally. But that is probably part to the stablecoin dominance, at least from my own theories that I've been sharing with you guys here. And the stablecoin dominance for the USDT came up, rallied, and then got rejected at that level, at least for the time being on the weekly chart. Ideally, we don't see it go above for around number 4.8%. And for now, it is just grinding out here, still below that red diagonal, which is essentially the all-time support line for each of the market cycles. Closes above here, not going to be a great thing for the bull market. Ideally, we do get some rejections over the coming weeks, over this period that we've been discussing, August, September, and then that rally to the south side for the stablecoin market, breakdown of 3.7. Basically, all hell breaks loose in a good way. But if the markets keep grinding between 3.7 and 4.8, then you're just going to keep seeing a rotation of capital or rotation of stablecoins through the markets, cryptos, altcoins, and into Bitcoin, or vice versa, into those stronger alts. While they go on their runs, Bitcoin pauses and then basically flows back through. And we're seeing that with the others chart. It's found support at the moment. It's holding, it's pulling away again from the support level. That's ideally what you want to see for an altcoin season. If it fails below these levels, fails below 7.8, 8.1, or even anywhere as low as these levels here, and goes lower, then we have to reset the counts for the overbalance in time and price to the upside. Basically, resetting the counts for when the bulls take control. At the moment, it's a good start. Nice little rounded bottom here. The pullback on the stable coins is potentially leading to this slight rally in altcoins. As for the major alts, ETH BTC also going relatively well, just getting this little rejection here at 3.2%. Any pullbacks towards 2.6%, still okay for this cycle. I think if we start to go below that, that's when the weakness will begin to form for ETH, and we'll have to go on another venture to overbalance the time and price, basically to get the bulls back into the game. For now, it seems like Bitcoin or ETH is going to outperform Bitcoin for this stage of the cycle, provided it remains above 2.6%. And that is also showing through in the USD price. It has been rejected again, 3,900, pretty significant pullback, but we've been ready for this based on the weekly counts, 1, 2, 3, 4, 5, 6. If you guys remember, we've used this with the GAN Swing Pro, turning on your bar counts on a weekly chart. It helps you identify when the stretch, when the energy may begin to run out in time. Therefore, you don't necessarily need a price target. You just need to look at the time targets, because there's no way to know that from the stretch higher, from the levels at say 2,200, that it was going to go to exactly 4,000. Many were talking about 5 and 10,000. But when the time began to run out at 7 weeks from the turning point, then you're basically short on time. It's very unlikely that it's going to get to those price targets. Then again, 6 weeks to the upside, 2,400 up to 4,000. We had the 7 weeks just recently, 1,400 from the low, ran up to 2,800, pulled back, and then we had another count of 6 weeks to the upside here. So that's where we've got this pullback. And now that we have a turning point in the market from the run up from 14 to 39, 50% level comes out at 2,700 for a nice round number. Also, it's still above 28 and 29 and 3,000, which is a psychological level. So any sort of pullbacks down to that zone of mid twos is still going to be bullish structure. So it could go as far as 32% and still be in bullish structure. So in this last week, we saw one of the largest Ethereum outflows of ETFs. It's still, as I said, drink every time you hear me say bullish structure. We're still in this bullish zone. Pullbacks are absolutely okay. And I think this is basically a cooling off period from the amount of ETF flows that ran up into those highs. Yet again, around the peaks of ETF inflows, we saw price begin to stall. There was one huge day on the breakout, and then prices came back to some pretty significant ETF inflows. 140,000 ETH, 122,000 ETH, all were occurring at the highs like they did previous times. Look at the highs here, 111,000 at those tops, and then again at this top around 93,000 just before the price pulled back. So it's not trying to call the end of the move higher. It's just looking at local highs and potentially local bottoms when you get major outflows, just like back here. You had some outflows coming up. Didn't mean the price was ready to stop falling. You just saw that the price stopped for a period of time before it continued to run into that low. Similar sort of thing happens with BTC. Huge inflows towards those highs. Many, many times we've covered this. And as you get to some of those lows, or at least local lows, possibly before the price continues lower, you got significant outflows happening yet again. Basically, buying the highs and selling the lows. But there is still a lot in the background if we get onto the fundamentals of what's going on, even though that price is having a cooling off. Potentially, we'll see some of these narratives build up again. 99% of CFOs at $1 billion, at $1 billion firms, eye crypto for long-term business use. This is what Deloitte has found. Only 23% expect treasury crypto use within 2 years, rising to 40% at larger firms. These are the sort of narratives that I'll expect to come into the headlines the more we continue on with this cycle. Now, we're seeing it lightly at the moment, I think, but this will probably become more extreme as we rise into those peaks. I don't think we've seen enough. Others believe we have, but I beg to differ. ETH treasuries top 10 billion as institutes doubled down on Ethereum. That's probably why we've seen the ETH BTC begin to rise. Yes, we've had other big headline CTOs, CFOs, and all sorts going on to CNN and all these other news outlets to continue to pump their bags. Case in point, BitMine with Tom Lee. You've also got firms like Bernstein, SharpLink Gaming, which is from Japan, basically all trying to get into ETH. And then all their jobs are to do is basically go on TV and talk about why we have to buy ETH. They don't have any other reason to be buying it apart from price go up. When you listen to their interviews, there's not really anything to it. They think there's going to be a shortage. They're buying more. We've seen it time and time again. I would suggest not to fall into that narrative. And I think one of the better ones out there that doesn't get stuck into narratives is Mike Novagratz. I've been in the game since early 2017. Mike's been here for a very long time. I followed him through each of the cycles, and he's typically one of the few that doesn't put out stupid price targets. Sure, Bitcoin could hit 500. It could hit 1 million. He's not going to be getting on to massive podcasts like what Cathie Wood does on some of those big podcasts talking about $1.5 million Bitcoin, but she is just there to sell her fund. And in the case of Mike Novagratz, he is also selling a fund, but for whatever reason, he seems to keep it relatively level-headed. And I respect that, especially from someone who needs the prices to go up in order to make bigger and bigger profits for their business. Ripple faces scrutiny over bank partnership. So in this case, there's some pretty good evidence to suggest that there's no reason why Ripple should even be worth anything. But we've heard from the CFO or CTO in this case, who has also said, CTO, that even Ripple can't use the XRP DEX for payments. So although it looks like Ripple can keep going up throughout this cycle, I think we'll start to see some of the reasons why it might not. So I'm definitely not bearish on Ripple, provided it remains above $2.60 for now. I think we've got some further upside, but it's looking a little shaky, especially if the CTO doesn't believe that there is any reason that XRP, or doesn't see any way that XRP can even use their DEX for payments yet. Now that might come in the future, but I think there's going to need to be a little bit of time here. But even if that's the case, why I'm still bullish, partly because of mostly because of the chart, you still have fundamental headlines like institutions quietly piling into XRP and Solana ahead of Ripple SEC verdict. Now this could be a good thing, or if the verdict is bad, of course, we start to see a bit of a decline here. But nonetheless, there is still more bullishness on the chart and in the news, which is what most people look at for reasons for XRP to be going up. As I said, even if the CTO openly says even Ripple can't use the XRP DEX for payments yet, because we can't be sure Ethereum won't provide the liquidity for payment. So not to say that it doesn't work, they just can't use it. And we're seeing that with the XRP BTC dominance here. It's continued to get rejected at 3,000 Satoshis now, going back to 2019. So it's coming up to a 6-year resistance level. If this can get above, unfortunately, there are only ifs in this game, and we have to play the probabilities. A break of 3,000 should be some really nice gains here. Somewhere I'm looking to is to around 4,400 to roughly 5,000 Satoshis. And if Bitcoin's still going up, XRP gets a nice little breakout, that could be really, really positive for the price in terms of some significant gains. That rise up to the first resistance level would be about a 60-70% outperformance over BTC. If this is going to break down, then we got to start watching what we're doing holding XRP. We see any sort of breakdowns on a monthly basis now coming up, with the time frame also coming up for XRP below these levels of about 1900 satoshis and 1300 satoshis. That's probably going to spell the end to any sort of significant outperformance of XRP for this cycle. Solana BTC also following suit here with the weakness against BTC, needs closes above 0.0018. And so that's basically the story of altcoins at the moment, even though Bitcoin has been outperforming, showing some relatively good pace here, and Ethereum also showing some good pace here. Hit the like, subscribe to the channel. I don't think we're over yet, as I pointed out many times before, but I don't think there's a reason to be stressing out either, especially if you are positioned well. And if you're still wondering how that works, TIA Premium, link in the video description. Shout out to our traders who are doing very, very well on their longs and their shorts, notching up some really good percentages here, 70%, 113% on their shorts. And we have the free reports also coming out. Thanks again, guys. I'll see you back in the next video. Take care. Peace out.